In January at CES, Synaptics made a little bit of buzz, and so we had a follow-up article on that over on Semi Insider. Here is where Synaptics falls into the semiconductor industry flow. Synaptics is a fabless chip designer.
And what that means, as typical with a fabless chip designer, not only are they designing their own products, they also have a lot of IP that they develop. Historically, Synaptics has had outsized allocation of their revenue to the mobile revolution, especially starting in the late 2000s. They are one of the companies behind the IP around display drivers, as well as touch screen sensors. In this chart, the purple bars is Synaptics' total revenue. Orange is their mobile revenue. So up until about 5-6 years ago, the majority of their sales was still mobile. But back in 2022, they reshuffled those reporting segments to now enterprise and automotive in red, core IoT in blue, and then mobile still in orange. So going on year 5 now of those new revenue segments, because Synaptics is making a bigger push into these markets where the hope is AI breaks out of the data center and becomes part of the physical world around us. And so some of those chips that were showed off at CES are around human-machine interfaces, or HMI. What the heck is a human-machine interface?
It's a great question.
We don't know.
We don't know.
It's very ambiguous. No, seriously. Go ahead, break it down.
This human-machine interface is how you interact with a computing device. You can think about this as your screen on your cell phone, how you interact with all of the apps, the tools that you use every day on your phone or on your computer. That is the human-machine interface.
But the crucial detail here is, for Synaptics especially, if AI does spread into the physical world, it's going to encompass a lot more than just a phone or a PC that you look at. And so HMI is more than just a display. It could also be something like your voice and how the machine hears and responds to your voice. It could be motion control, maybe control with gestures in a factory setting. It could be some combination of all of the above, or in your car also, interacting with the infotainment system, the buttons that you use to control self-driving features or autonomous features in the car, voice activation. So combining all of that is obviously much more complex than just looking at and touching a screen. This is also tied up in oftentimes what we call sensor fusion. So taking the inputs from multiple sensors, allowing the machine to interpret what all of that means, and then governing the output as a result. This is a market that Synaptics is getting into that has a lot of overlap with microcontrollers, or MCUs. We've done a number of videos on these, as well as FPGAs, field programmable gate arrays. Here's a look at our basket of companies that fall into that category. So you can think of Synaptics as starting to compete in this arena, as well as with this new product line that they're trying to get up and running, the Astra for HMI.
If you haven't had a chance to watch it yet, make sure you check out our auto, industrial, and power video that we just did. This seems like great timing for Synaptics because a new growth cycle has started in those end markets.
We have that highlighted in the last row of our semiconductor end market cycle chart, auto and industrial and power. And for those of you that have been with us now for at least a couple of years, this chart might bring up bad memories, might give you nightmares. Companies that participate in these end markets, including Synaptics the last few years, really got wiped out pretty bad when the chip shortage immediately following the pandemic and the supply chain disruption at that time flipped to a chip oversupply. And we've been waiting now for this more dramatic recovery in sales, so-called U-shaped recovery. And it does seem it is finally starting to take shape as we enter 2026.
One of the problems with Synaptics, though, is that they've had a difficult time sustaining growth. Here's a look back all the way since 2016, about a decade's worth of total revenues in purple, net income in red, and free cash flow in green. The bars all the way to the right are analyst expectations for the March 2026 quarter. And as you can see, there has not been much growth at all for Synaptics.
And to be fair, they are up off of the cycle lows from last year, but they have not yet begun reporting an expected big inflection higher in sales and profitability, which stands in contrast to some of the other companies in that chart we showed you earlier in the auto, industrial, and power market. Now, that could change as 2026 progresses, especially if that new line of chips, the Astra for physical AI and human machine interfaces, takes off. And so this is one to keep on your radar. Maybe you think this is one that is being overlooked at the moment, and there's a chance that maybe they do join in on the party later on in 2026 and 2027 as AI starts to enter more dramatically into the physical world.
Let's take a little bit deeper of a look into Synaptics' valuation and outlook that's baked into the current stock price. Now, you know that we like to run reverse discounted cash flows here at Chip Stock Investor, but another thing that you can do is also solve for the current enterprise value,
which is what we have displayed here. Total enterprise value, which is market cap, plus, in this case, net debt on balance. So as of this recording, that is about $3.7 to $3.8 billion. So this is very much a small cap in the semiconductor market. Trailing 12-month free cash flow of $155 million, which we just pulled from the prior chart we showed you. For those of you that are on Semi Insider and using the research dashboard, you can select that use custom weight override, plug in the number that you want, $155 million for free cash flow. Now we can solve for the current valuation. We went with this particular scenario, 5 years, 9% free cash flow growth rate, and a terminal rate of 5%, discount rate of 10%, gets to the current valuation of Synaptics of $3.7 to $3.8 billion, give or take a little bit. Now, the reason why we do this is if you use things like price to free cash flow, that is a great metric for comparing a company to where it was in the past, as well as comparing it to its peer group. And the 1-year forward free cash flow expectation implies that it trades for less than 18x expected free cash flow. That could be really, really cheap. And indeed, if you compare it to its peer group, Synaptics is trading at a value. But this reverse DCF takes it a step further and gives you a little bit more information. This is the bar that Synaptics would need to clear, at least over the course of the next few years, to prove it true that it is actually a relative value compared to its peer group.
Perhaps the bar is set pretty low for Synaptics, making it a potential value stock in the semi industry, but it will depend on if the company participates in that auto, industrial, end market recovery that we've been talking about. Make sure you check out this video where we talk about that a little bit more extensively right here, and see you again at Chip Stock Investor.